Mickey Dickey here, giving you my weekly update from June 9th, 2023. And just a quick update here. You've got year to date, the NASDAQ is up 26%, the S&P is up almost 12, and the Dow is up a little over 2. Now, the trends we've been watching all along have been the convergence of how far down the NASDAQ has been, the S&P and the Dow, in correlation to each other. And if you remember when we started out, at one point, the NASDAQ was actually down 38%, and the Dow, even on its worst case, was down 18. But even when the NASDAQ was down 38, it was down like 12. So there was a big dispersion between the two. So what we're seeing here now is what I was talking about all along. With the NASDAQ being down 17, the S&P 10, and basically 8 on the Dow, they're converging. Now, the question has always been from the beginning, when they start converging, are they actually going to get back to their peaks? We don't know the answer to that, but we knew they were going to converge because they're normally not that far apart. So they're really coming together. The S&P is obviously very, very close to the Dow, and the NASDAQ's making its run too. Now, for the month so far in June, they're up almost exactly the same, 2.5, 2.8, 2.9. For the week, it was a relatively easy week. And you can't see the Dow on here being up 0.34, 0.39, and 0.14 for the NASDAQ, which again is going into there's not a whole lot going on as far as activity. Weren't a whole lot of earnings to move the market. The Fed wasn't speaking. The CPI doesn't come out until next week. So again, not a lot to move the market. So just the fact that the market stayed steady for that week is solid, because the week before, in week ending June 2nd, which actually included some of May, you were up 8%, 2%, and the Dow was actually down. So a kind of a big move there on the NASDAQ towards the end of May, first part of June. Now, the question we all also were looking at one point was whether or not one of the trends for the NASDAQ was to stay above 20% above its bottom. Well, it's up 31%. So clearly it's held that. But now we've got the S&P up 23% from its bottom and 18 on the Dow. So they're not all in a bull market, but they're getting very, very close. So what does this mean in the scheme of things? Now, normally I would give you my updates for the week, next week, of the stocks that I'm looking for trends. And we are getting towards the end of this earnings cycle. So there really isn't a whole lot. I'll give you the update. Monday, you've got Oracle. There's nothing on Tuesday I'm interested in. Wednesday, you've got Lennar Homes, which is kind of just a regurgitation of all the other home builders, in my opinion. Adobe on Thursday and Kroger on Thursday. So, and nothing Friday. So again, not a whole lot going on. What I am interested in, though, is some of reactions to these. Now, Adobe and Kroger, not a big deal. And same thing with Oracle. They're probably going to continue their trends. The Lennar one's going to be interesting because all of the home builders have come up massively from their lows very, very quickly. And, the question we've had from the beginning, if you remember my two-prong thing I'm looking at it, which is unemployment and the builders, homes, the values. Are we overbuilding in the home sector? And that continues to be my question. They keep saying we're not, but if we are overbuilding, there will become the bubble. Now, when it comes down to the value of the homes, we'll start getting those numbers here shortly. The April's numbers were right in line. So when we start getting May and June, the question is, are we down year over year in the median sale price of homes? And then unemployment, has it started to tick up? So, and not just tick up in 1 month. We need a trend in all of these. So we need a trend that real estate has gone down, let's say 2%, and then the next month it's 4%, and the next month it's 5%. If we see 3 or 4 months in a row where real estate market values are going down, and we see unemployment go from 3.5 to 3.7 to 3.9 to 4.1, let's see the trend going the other direction. Again, to me, those are more clear signs of a potential recession going forward. The big news for this particular week, once again, is going to be CPI on Tuesday and the Fed speak on Wednesday. So the question of CPI is, what number are we looking at? Now, I've heard anyone from 4.1 to 4.6 on the CPI number. My personal number is 4.5. So if we're in that range, but the question is, whatever we come out with and whatever the number is supposed to be, do we beat it? Or do we meet it? And then how does the market respond to it? So let's assume for a minute it's 4.5, or okay, again, let's just say 4.6. So let's say it's 4.6 and we come in at 4.6. That's still a decrease from the 4.9 that we're at. We're on the right trend. We're continuing to go down. How does the market respond to that? Is it slowing? Because, you start hearing these weird terms when we start talking about these things. Well, it's slowing down now. It's not going as fast, which, last month was only down 0.1%. The month before it was down 1%, which, as I've said before, don't look at 1 month, look at multiple months. So, if you have 1 month that's down 1 and you got one that's down 0.1, between the two, you were down, 0.55 per month, which, 0.55 reduction is huge in the CPI. So again, it's not just the number, it's how does the market respond to the number? And then the Fed speak on Wednesday. So the question really becomes, do they pause? Which again, I don't care what you want to call it, but do they not raise this particular meeting, which everyone is anticipating? So let's assume they do that, and it's going to be hawkish. They're going to try to push this and make this a negative thing. But if CPI is at 4.5 or 4.6, which means next month it's going to be even lower, probably very close to 4, maybe even break into the 3s. They're not going to speak again until, 6 more weeks, which is either the end of July, early August. We'll have the next CPI print by then. So it's going to continue to be down. Where's unemployment? So it's really how the market responds to this stuff. So it's going to be very interesting. We've had this big run. Everyone's being cautious because of especially the NASDAQ being up 31% from its bottom, but even 18 on the Dow is a pretty solid run. And, the S&P being up 23. We're still not back to where we want to be, but we're getting very close. Most probably this week, you're going to be under 10 on the S&P, and we're already under 8, under 8 on the Dow. So if that continues, it's very possible we could be only down 6% from its high on the Dow and maybe 8% on the S&P and maybe under 15 on the NASDAQ. Everything continues, in my opinion, to be set up for the next couple of months to continue a run, mainly because the push down was based on inflation and interest rates being higher. Now that they've paused and inflation's coming down, we should continue that trend based upon the numbers. It doesn't necessarily mean it's going to happen, but that's what should happen. Then when we start getting sticky, and probably the August print coming out in September is my question. So again, each month is really how does the market respond to the CPI and the Fed speak. So again, we're kind of at their whim, which, the neat thing of this is everyone's been pushing on this stuff, but it's kind of been an interesting situation for Powell where he has kept the market focused on him, focused on the negativity and focused on these things, yet the market has continued to respond. I hear a lot of analysts say that it's negative, that it's wrong, that the market's got it wrong. Very seldom is the market wrong. I hate to say this, folks, but the market normally gets it right, especially long term, because this is where people that have a lot of money are investing it. I have a tendency to think of what they're talking about as being true. So when I look at what's going on with Powell, when I look at what's going on in the market's looking past what Powell and what everybody's talking about. Again, are they negative? Maybe, but it really kind of depends. As we've talked about before, everybody says that Powell keeps saying that unemployment has to go up. No, again, his models say that it will go up. That doesn't mean it has to. Inflation's continuing to come down. If inflation continues to come down, unemployment does not go up, you have your soft landing. So when you look at the CPI print, one of them I'm looking at is, and we looked at this before, gas prices are going to be down almost 19% year over year. The question for me is going to be real estate. Because it's 39% of the CPI, it was still up over 8% on the CPI print year over year. When does that lag effect come into play? Because everybody says the CPI is going to get sticky. The question is, some of the underlying things might get sticky, but real estate hasn't come down yet. And we know that it has, or at least isn't going up as drastically as it has been. When you look at some of the numbers out there, some people think that April's numbers were actually down 2% year over year. And if they truly were down 2% year over year, that means that at some point that's going to correlate in the CPI, and you're going to see 39% of the CPI not going up year over year. That's not going to be sticky anymore. I don't know when that's going to pull up. So what I'm really going to be focused on in this particular CPI print is what is the real estate increase year over year, because it's going to have a significant impact on the overall numbers and going forward. So I'm looking for trends. Hopefully, it's going to be lower than that last month. If it was at 8, maybe it's at 7.7 or 7.5 or 7 or whatever the number is. I want to see a trend in the real estate side, because if I start seeing a trend on the real estate going down, that means it's going to correlate into the total CPI because it's such a big number or percentage of the CPI. So anyway, that's what I'm looking for this week. Again, nothing I'm specifically, suggesting we buy, sell, or do indifferently, but, talk to your financial advisor, make sure your portfolio is set up the way that it needs to be for your long-term goals and objectives, and Dickey out.